We'll now move on to the next problem in the redemption of debentures. The balance sheet of convertible limited unlisted company other than AIFI banking company, NBFC and HFC on 31st March X1 stood as follows. So you have a share capital of 50 lakhs, reserves and surplus of 1 crore 10 lakhs, non-current liability, long-term borrowings of 1 crore 65 lakhs, other current liabilities of 1 crore 25 lakhs. Then you have non-current assets, property, plant, equipment, non-current investment of 15 lakhs, cash and cash equivalent of 75 lakhs, other current assets of 2 crores. Notes to accounts is given to you. The share capital is comprising of 5 lakh equity shares of 10 each, fully paid 50 lakhs. Reserve surplus, you have general reserve, P&L account, DRR, so total 1 crore 10 lakhs. The long-term borrowings is nothing but 13.5% convertible debentures, 1 crore. So totally you have 1 lakh debentures of 100 each and other loans of 65 lakhs. Non-current investments is DRR, which is a DRRI is 15 lakhs. Okay. Now the debentures are due for redemption on 1st of July X1. Okay. The terms of the issue of the debentures provided that they are redeemable at a premium of 5% and also conferred the option to the debenture holders to convert 20% of their holdings into equity shares at a predetermined price of 15.75 per share and the payment in cash. So, couple of things. The terms are very clear. We are going to redeem the debentures at a premium of 5%. Number one. Then option is given to the debenture holders to convert into equity. 20% is the maximum conversion which is possible from debenture to equity, which means the balance 80% you have to redeem in cash. So conversion is only maximum 20%, right? And what is the price at which it is getting paid is 15.75, right? The price of an equity share to determine the number of equity shares. So the price of an equity share is taken at 15.75. Now, assuming that except for 100 debenture holders holding 25,000 debentures, the rest of them exercise the option for maximum conversion. So the total debentures you have is 1 lakh. Right, 1 lakh debentures, of which 25,000 debenture holders, they are not ready for the conversion, which means they want complete cash. That is the understanding. Okay. The balance people, they agree for the ultimate maximum conversion. The investments were realized at par on sale. All the transactions are put through without any lag on 1st July X1. Redraft the balance sheet of the company as on 1st July X1 after giving effect to the redemption. Show your calculations in respect of the number of equity shares to be allotted and the necessary cash payment. Now, if you look at this, total 1 lakh debentures are there, they're outstanding. Now, 25,000 debenture holders, they are not agreeing for the conversion, which means they have to be paid cash. So, balance 75,000 debenture holders, they agree for the conversion. When I say agree for conversion, it is 20% can be converted. Right, which is 15,000, 75,000 into 20% is 15,000. So, out of the total 1 lakh debenture holders, only 15,000 debentures can be converted. The balance 85,000 debenture holders need to be paid cash. That is the understanding, right? So, total 1 lakh debenture holders, right? 25,000 of the debenture holders, they are not agreeing for the conversion. So, you have to pay them cash. That's separate. So, have that 25,000 separate. So balance will be 75,000. Of that 75,000, they agree for the maximum conversion, which is 20% of that. Which what is 75,000 to 20%? 15,000. So 15,000 will be converted. So balance 60,000, you have to pay cash. So already you have a 25,000, right? For people who are not ready for conversion. And now for the people who are ready for conversion, the 80% value we need to pay cash. So 25 plus 60 is 85,000. So if I want to segregate it into two parts, the total debentures outstanding is 1 lakh, right? So I will actually for the 15,000 debenture holders, I will make a conversion into equity. And for the balance 85,000, we need to pay the cash, right? Now look at the working of this. It's pretty straightforward working only. Let's not get into the balance sheet first. Let's get into the first working note. Number of shares to be allotted. This was exactly what I told you. 1 lakh debentures we have, right? Now the number of debenture holders for which they are not agreeing for conversion is 25. So when I subtract that 25, the balance is 75,000. 20% is a maximum conversion, which is 15,000. So 15,000 worth of debenture holders, they are agreeing for the conversion. Now, how many shares will I issue for that 15,000? So 15,000 into 105. Face value of the debenture is 100, but we have agreed to repay them or redeem them at a premium of 5%. So we need to pay them 105, 5 rupees more. So the number of debenture holders is 15,000 into 105 will be 15,75,000. This is the total amount, right? This is the total redemption value of the debenture. We are not going to pay cash for this amount. We are going to issue equity shares for them. What is the issue price of an equity share? It is 15.75. So 15,75,000 divided by 15.75 will give you 1 lakh shares. 1 lakh shares. Now, so when I say 1 lakh shares, it comprises of 2 parts. 1 lakh shares into 10 will be the share capital part. 1 lakh shares into 5.75 will be the security premium. Because the total issue price is 15.75. The face value of an equity share is 10. But we are issuing at 15.75, which means 5.75 is premium. So 10 rupees is capital, 5.75 is premium. So if I want to break up this, so we'll say 1 lakh shares of 10 rupees will be the share capital part, and 1 lakh shares of 5.75 will be the security premium part. This is the first working. You have to be very careful. To determine the number of equity shares to be allotted, it is 1 lakh equity shares. And there are 2 components in that. 1 lakh shares into 10 rupee will be share capital, and 1 lakh share into 5.75 will be the security premium. Now let's look at the cash component. How much are we going to pay? Right now, out of the total 1 lakh debenture holders, only 15,000 debenture holders we are agreeing for the conversion. Baki 85,000 we need to pay. So what is the price at which we are going to pay? 105. That is the redemption value. So 85,000 into 105, that will be 89,25,000. Here we have to pay cash. This is the cash payment. That is the working note number 2. The cash payment is 89,25,000. Now third working is what is the final amount of cash balance which we are going to have. Already in the balance sheet, we have an opening balance of 75 lakhs. Look at the balance sheet. Please look at the balance sheet. You will see that the cash component is 75 lakhs. Look at this, cash and cash equivalent 75 lakhs. That is the opening balance. Now you are selling that investment also. It is very clearly given the problem. The investments were realized at par on sale. What is the investment? 15 lakhs. So already you had 75 lakhs. Now you're going to get 15 lakhs on the sale of the investment. So that will be 90 lakhs. Out of that 90 lakhs, we are going to pay 89,25,000 to the debenture holders, which means we will be left with a balance of 75,000, which will be reflected in the closing balance sheet under cash and cash equivalent. So these 3 working notes are very important. Working note number 1 deals with the number of shares to be allotted. Working note number 2 deals with the total cash payment to be made to debenture holders. And the working number 3 will be the remaining cash balance, right, at the end of the year after the redemption. All right. Now we look at the balance sheet, and the idea is to prepare the balance sheet as well. Now let's look at the notes to accounts first, and then we can go to the balance sheet. Look at share capital. If you look at the balance sheet, look at share capital, you have 5 lakh shares of 10 each fully paid, right? But now you're issuing another additional 1 lakh shares. So 5 lakh plus 1 lakh, it becomes 6 lakhs. So 6 lakh shares of 10 each will be 60 lakhs. That is point number 1, right? Point number 2, reserve surplus. There is no change to any of these things. General reserve, P&L account, debenture redemption reserve will be intact. 90 plus 10 plus 10, which is 1 crore, 10 lakhs. Absolutely no problem. But we are actually redeeming the debentures at a premium of 5%. So what is the additional value are we paying them? Total value of debentures, 1 lakh debentures. If you're going to pay 5 rupees additional, it's a loss. It's a loss to you. So that loss will be removed from the or adjusted against the reserves and surplus. Total is 1 lakh debentures. Face value is 100, but we are actually paying 105, which means when you are paying a premium, someone has to sponsor. It's a loss, right? So it will hit our reserves and surplus. So 1 lakh into 5 is 5 lakhs. So our reserves and surplus will get reduced to the extent of 5 lakhs. So balance will be 1 crore and 5 lakhs. And finally, we have this security premium account. Remember, we discussed that point. 1 lakh equity shares were issued, 10 rupees capital, 5.75 is security premium. So 1 lakh into 5.75 will be 5,75,000. So that is the importance of these notes to accounts. So share capital, reserves and surplus. So share capital, it was 5 lakhs initially. Now when we issue 1 lakh equity shares, it has become 6 lakhs. The reserve surplus, no change except for the adjustment on the premium on the redemption of debentures of 5 rupees per debenture. So total 5 lakhs, we need to reduce it from the reserves and surplus. So that will give you 1 crore 5 lakhs. And the security premium, that will be in addition to the reserves surplus, because when you issue the fresh equity shares at 15.75, 5.75 becomes a premium. So 1 lakh into 5.75 will be 5,75,000. Right? Now, if you prepare the balance sheet, rest is simple. Share capital, that is note number 1, we already know. Reserve surplus, note number 2, we already know. Right? Non-current liability. Non-current liability, you have only the long-term borrowing. Debentures, we have actually redeemed. Right? You have only this long-term loans of 65 lakhs. Only that will be there in the balance sheet. And other current liability, 1 crore 25 lakhs, I don't see any change to that. It will remain intact. I don't see any change to that. It will remain intact, 1 crore 25 lakhs. So that is the balance sheet on the liability side. Asset side, PPE, no change. The cash and bank balance is that is the closing cash balance which we actually arrived. It is 75,000, and other current assets also no change. It is going to be 2 crores. So balance sheet also tallies. So it's very important problem. So you need to have the working notes first. Working note 1, 2, 3. Then prepare the notes to accounts, and then you can go to the balance sheet preparation. You can leave sufficient space for the balance sheet first. Then you start with the notes to accounts and then the working notes. That is the order of presentation in the exam also. Okay, hope this is very clear. You can pause the video and you can copy this. That marks the end of the problem.